Welcome to all of you. Elrigu Swagata. Today we will solve the 14th problem in case of sale of partnership. Indra and Sudha are partners sharing PL in the ratio of 2:1 and their balance sheet as on 31/12/8 was as follows. So we have the capital account of Indra and Sudha, reserve fund, creditors, bills payable, Indra's loan, cash, bills receivable, debtor less RBD, outer column 28,500, stock, machine. They agreed to sell the business to a limited company and the company to take over assets including cash and liability as follows. Machinery 8,000, stock 17,500, debtor 25,350, bills receivable 2,500, goodwill 3,000. The company agreed to take over creditors at 19,500. Expenses of realization amounted to rupees 150. The company paid 20,000 in fully paid shares of rupees 10 each and balance in cash. So prepare necessary ledger account in the books of the firm. Indra and Sudha are partners sharing PL in the ratio of 2:1. So it's called 2/3 and 1/3. And their balance sheet as on 31/12/8 was as follows. Capital account of Indra 15,000 and Sudha 10,000 to be taken as balance brought down. So to be taken in capital account as balance brought down. Reserve fund distribute to all partners in 2:1. ರಿಸರ್ವ್ ಫಂಡ್ ಅನ್ನು ಎಲ್ಲ ಪಾರ್ಟ್ನರ್ಗೆ ಎಲ್ಲ ಪಾಲುಗಾರರಿಗೆ 2:1 ರೇಷಿಯೋದಲ್ಲಿ ಹಂಚ್ಕೊಳ್ಳಿ. ಕ್ರೆಡಿಟಾರ್ ಟ್ರಾನ್ಸ್ಫರ್ ಟು ಕ್ರೆಡಿಟ್ ಸೈಡ್ ಆಫ್ ರಿಯಲೈಸೇಷನ್ ಅಕೌಂಟ್. Bills payable transfer to credit side of realization account because both are external liability. Indra loan direct agi bank account ge tagoli. Since it is a partner's loan, internal liability, Indra loan seeda bank account ge tagobeku, alli pavati madabeku. And next we have this cash to be taken to bank account because they have not mentioned that cash is taken over in the adjustment. Machinery taken over, stock taken over, debtor taken over, BR taken over, goodwill taken over. Oh, sorry. Clearly they mentioned that they are taking over including cash also. So cash is also taken over by the company. So clearly mentioned here, including cash is taken over. So thus cash should be transferred to debit side of realization account. So cash is taken over by the company, transferred to debit side of realization account. BR 2,500 transferred to debit side of realization account. Debtor gross debtor 30,000 accounting rule prakara, accounting procedure prakara, transfer debtor to debit side of realization account and reserve RBD to credit side of realization account. 30,000 ಡೆಬಿಟ್ ಕಡೆ ತಗೋಬೇಕು, 1,500 ಬಂದು ಕ್ರೆಡಿಟ್ ಕಡೆ ತಗೋಬೇಕು. Next we have stock 21,850 transfer to debit side of realization account. Machinery transfer 10,000 to debit side of realization account. They agreed to sell the business to a limited company and the company to take over assets including cash and liability as follows. So cash sameta tagondidare. What are the assets taken over by the company? So machinery is taken over rupees 8,000. Clearly mentioned, machinery taken over 8,000 plus stock taken over 17,500 plus debtor taken over 25,350 plus BR taken over 2,500 plus goodwill taken over 3,000 plus cash taken over 150. The company also agreed to take over creditors at 19,500. This is called liability taken over. So asset taken over minus liability taken over will be PC. assets minus liability taken over will be purchase consideration. And BP is taken over or not taken over ಏನು ಹೇಳಿಲ್ಲ. So we assume that BP is not taken over, hence BP has to be paid. Company agreed to take over creditor ಅಂತ ಹೇಳ್ತಾರೆ ಹೊತ್ತು, but BP ಬಗ್ಗೆ ಏನು ಹೇಳ್ತಾ ಇಲ್ಲ. So we assume that BP is not taken over. Expenses of realization amounted to rupees 150. So this is called realization expenses. The company paid 20,000 in fully paid shares of rupees 10 each and balance in cash. 20,000 shares ಮುಖಾಂತರ ಕೊಡ್ತಾರೆ, partly shares. ಉಳಿದ ಬಾಕಿ ಬಂದು shares cash ಆಗಿ ಕೊಡ್ತಾರೆ. Prepare ledger accounts in the books of the firm. Now how do you calculate PC? We have this net asset method. So all assets taken over, cash taken over at 150, machinery taken over at 5,000, stock taken over at 17,500, debtor taken over at 25,350, BR taken over at 2,500, goodwill taken over at 3,000. So total asset taken over is 56,500 less creditors only taken over 19,500. So we get PC 37,000. Asset taken over minus liability taken over. Out of total PC 37,500, 20,000 is paid in the form of shares. Baki 17,000 is paid in the form of cash. Partly share, partly cash. Now realization account. Step 1. Transfer all assets from balance sheet to debit side. We write to cash, to BR, to debtors, to stock, to mission. So balance sheet ಅಲ್ಲಿ ಇರೋಂತ ಎಲ್ಲಾ assets ತಗೊಂಡು ಬನ್ನಿ debit ಕಡೆ. So total asset brought in towards the debit side is 64,500. Next, transfer the liabilities by RBD. Gross debtor 30,000 debit kade, RBD 1,500 credit kade, by creditors 20,000, by BP 5,000. Total liability transferred is 26,500. Next, PC purchase consideration. By PC 37,000 comes in credit side because the business is sold. It's a sale price. To bank, we have paid 150 towards expenses, realization expenses. Then BP not taken over has to be paid. So BP company ತಗೊಂಡಿಲ್ಲ, ಹಾಗಾಗಿ ಅದಕ್ಕೆ ನಾವು ಪಾವತಿ ಮಾಡಬೇಕು. Total 5,150. So thereby we get a total realization profit of 6,150. So 6,150 is called realization profit. Distribute to Indra and Sudha in profit sharing ratio. Indra gets 4,100, Sudha gets 2,050. Capital account ಮೊದಲನೇ ಹಂತ by balance brought down. So balance sheet ಅಲ್ಲಿ ಇರೋ ಅಂತ capital ಅನ್ನು ತಗೊಂಡು ಬನ್ನಿ 15,000 and 16,000. Distribute reserve fund 2,000 and 1,000. So first bring the capital balance and bring the reserve fund. Next, transfer the realization loss to Indra and Sudha. Distribute equity shares 26,000. Sorry. Distribute 20,000 equity shares in final capital balance ratio. So PC, they pay 20,000 in the form of equity shares. Therefore, distribute the equity shares to partners in final capital balance ratio. So if you calculate 20,000 into 17 divided by 28, you get the distribution of equity shares to the partners. How do you get final capital balance ratio? Final capital balance ratio ಮುಂದಿನ ಸ್ಲೈಡ್ ಅಲ್ಲಿ ತೋರಿಸಿದ್ದೀನಿ. ಹೇಗೆ ಲೆಕ್ಕ ಮಾಡೋದು? Debit side 15,000 of Indra, plus 2000 minus realization loss 4100. So Indradu net answer bandu 12,900. Adhe riti Sudhadu 16,000 credit side plus 1000 in the credit side minus loss in the debit side. So we get 14,950. So therefore our ratio dalli ನಾವು ಹಂಚ್ಕೋಬೇಕು. So you need to distribute equity shares to the partners in final capital balance ratio. Thereby you get a bank answer. A final settlement to Indra and Sudha 1090 and 760. So final capital balance ratio ಈ ರೀತಿ ನಾವು ಲೆಕ್ಕ ಮಾಡಬೇಕು. So credit ಕಡೆ ಇರೋದು 15,000 and 10,000. Add reserve fund 2,000 and 1,000. We get total 17,000 and 11,000. So total of credit side 17,000 and 11,000. Less debit kade iro anta realization loss 4,100 and 2,050. So net capital balance is 12,900 and 8,950. So idanna simplify madidre 1,290, 895, 110 cut madidre we get ratio 1,290 is to 895. So our equity share 20,000 ಈ ರೇಷಿಯೋದಲ್ಲಿ ಹಂಚ್ಕೋಬೇಕು. 20,000 into 1,290 divided by 2,185. So you get a fraction figure rounded to 810. Similarly distribute to Sudha 20,000 into 895 divided by 2185. So you get 8,192 ಬರುತ್ತೆ. ಅದನ್ನ to 8,190 ತಗೊಳ್ಳಿ. So ratio of shares cannot be in fractions. So take it in round figure. Next let us look into the bank account. Bank account. So debit side we record receipts. Credit side we record payments. Debit side we have only one receipt. Cash in the form of PC. PC alli cash agi partly cash agi barta ide adu namage receipt 17,000. Then we should pay Indra loan 10,000 payment. Then realization account alli ನಾವು ಬ್ಯಾಂಕ್ ಮತ್ತೆ BP ಮತ್ತೆ expenses pay ಮಾಡಿದ್ದೀವಿ. Expenses 150, BP 5,000 pay ಮಾಡಿದ್ದೀವಿ. So we get 5,150. Then final settlement of Indra's capital 1,090 and Sudha's final settlement 760. So thereby the bank account tallies with 17,000. Thank you.